Peter Maguire, CEO, AustraliaTrading.com, and Matt Orton, Chief Market Strategist at Raymond James Investment Managers. Welcome, gentlemen. Good morning, at least from where we are at. Let's get a sense, first from you, Peter. How are you seeing all the developments on the global geopolitical front, and what ripple effect could that have, if any, on oil markets or any other markets, gold, silver, and the like?
Well, good morning, Hirsch. Greetings from Sydney. A couple of things. First off, I wanted to see how the markets acted this morning, and that was interesting. Asian equities are well up, bid strongly, and oil markets have just done nothing. There's been really no move, a little bit of further softness in actual fact. Silver's up well, gold's through 4,400 an ounce. It's up the best part of $70 for the morning. And the overall momentum is one of, from a geopolitical standpoint, obviously that flight back to gold. Crude has really been very lackluster. And I want to see how the next couple of days transpire. I mean, these are not normal situations. I've followed these for many decades, and, you don't take countries over and then, this is just unusual, very, very unusual. And we understand the size of the fields in Venezuela, the largest reserves in the world. So, yes, and the next couple of days are going to be very fascinating how they play out, Hirsch.
Matt, how are you viewing the changed landscape, if I can call it that? How big is this change, and what kind of an impact is it going to have globally?
Hi, good morning.
Good morning.
While the geopolitical landscape has certainly changed, I don't think the landscape for equities from a fundamental perspective have really moved all that much. And I think that's why you're seeing equities continue what they were doing prior to the weekend. You're continuing to see futures up. The AI trade, technology is continuing to work. You're seeing optimism around global growth, despite the uncertainty that might be impounded or even elevated as a result of what we've just seen happen. And so the main message that I would give to clients right now is one of follow the fundamentals. As long as the companies that you own are levered to growth and earnings growth and margin expansion, that's where you want to be. And there are plenty of opportunities for that, both here in the US, as well as around the rest of the world, India included. So I would look through a lot of this. And if anything, part of my playbook over the past year has been play offense with defense. And defense companies should continue to win in this sort of a heightened geopolitical tension environment going forward.
Okay, so the defense stocks are clearly going to be the winners over here. Peter, also talk to us about in terms of the crude supply that we're seeing globally, now that the US has decided to take over the infra and pump more money into Venezuela's oil sector. A, by when do you think Venezuelan exports will pick up? And B, what impact is it going to have on the global crude supply, especially from the non-OPEC region, since OPEC this weekend has just called for another pause?
Well, I think you can look at through many lenses, Nihi. A couple of things. First off, the timeline that you've got to devote to something like this to actually scale it up, I think will take a number of years to get peak production up. There's the first side of it. It'll depending upon what the strategy is going to allow the US to embed themselves in there, and the likes of Chevron and other major players, this is all got to be a work in progress, and it's not just simply turn the taps on. So I think you're looking at many months to get an idea as far as how much capacity they want to bring online. Second part, how deep they want to invest into the Venezuela fields. And the third part is going to be, we've got a global positioning at the moment as far as excess capacity. Prices are actually 18% softer than this time last year, and they seem to be in a downdraft position, with Brent and WTI probably going to be closer to 50 this year than they will be to 60. So there are also other points that need to be considered. And quite obviously, the markets haven't digested this and said, right, there is a point in time, and from a geopolitical point, to say we're going to, the market's up $4 or $5 a barrel now. No, that's not the case. So all of these factors, I think, are going to work through. And I think 26 is going to be a relatively good year for consumption, and relatively good as far as the man and woman on the street, in the sense of cheaper energy prices. So that's going to be, I think, a winner for all, and inflation will be certainly lower going into the mid part of the year.
Matt, hi, morning. if crude is going to remain subdued despite this geopolitical risk, what do you think would be the drivers for the market this year? Uh, will technology and AI theme continue to be the key driver?
I think technology and AI can continue to be a driver of the market, but I'm not sure it will be the absolute key driver to the degree that it has been in the past. Around this whole conversation and longer term, likely contained, if not slightly weaker oil prices, that's basically a tax cut on not only the US consumer, but consumers around the world. And so that benefits global growth. And elevated global growth should benefit earnings across the board. And so what I'm looking at is cyclicality in general. I think investors want to lean into cyclicality as a ballast or really a complement to a pro-growth exposure. So I think you want to balance AI exposure into the highest quality AI names where you're not seeing a deceleration with respect to earnings growth. And there's a number of names out there where we're continuing to see quarter after quarter, year over year, strong growth in margins. But beyond that, look to financials. Financials globally have been incredibly strong. Even in India, HDFC has been one of my top picks, and I continue to have a tremendous amount of confidence, as well as in the US, regional banks, large cap banks with more M&A activity, which is all predicated on stronger underlying growth. The industrials complex around aerospace and defense, and even oil services companies, which are going to be at the center and perhaps the first beneficiaries of any sort of action that might be taken with respect to Venezuela. So there's a lot of opportunities that are still out there. But I think investors want to have a more balanced approach while still being overweight tech, layering in cyclicality where there's opportunities.
Okay. Peter, you continue to be positive with regard to gold, silver, especially precious metals. Give us your take on what the downside risk could be and how much of an upside are you penciling in on those. Also, with regard to copper and some of the other metals, how are you viewing that pack?
Well, Hirsch, first off, I'll start with copper. It's sitting at 12.5. We nearly nudged the 13,000 the other day at 12.9 odd down on the LME. I think it's got a $13,500 handle. I feel as though that'll probably hit that within the next 6 to 8 weeks by end of February. The overall updraft as far as global consumption and in the sense of it, industrial metals are going to play very, very handsomely across global demand. If I'm looking at the other side of it, of course, gold and silver, I've gone out and said 47.45 as a handle for gold by end of this month. I think 5,200 to 5,500 is where you'll be sometime in 2026. And that might be conservative if it keeps the same momentum of what we've seen in the last 12 months. Silver, I think by the end of this month, will be at $92 to $95 an ounce. Currently sitting at just under 75. It's up 5% today. And it hit $84, I think, Thursday last week, or it might have been Wednesday. So, yes, been very, very bullish, and one can't take your eye off that. So, I think the overall theme, Hirsch, is going to be keep your eyes on both industrial and precious metals, and certainly rare earths. And 26, I think, will be blast off in many ways as far as price and usage.
Okay, Peter and Matt, really appreciate you joining us, and thank you so much for your time. Have a good day.
Thank you.
Thank you.